Hello, everybody. Kirk Spano here, Margin of Safety Investing, fundamentaltrends.com, Blue Mound Asset Management, and various other places around the World Wide Web. Today's article that should be published right around end of the market day. Macro dashes, inflation, debt ceiling, King Dollar, and Bitcoin. What we have been seeing for 3 quarters now is that inflation has been coming down, and that the inflationistas continue to stomp their feet, pound their chests, sing song about how inflation is the boogeyman. Inflation is not the boogeyman. Inflation is just somebody who crashed the party, and it's taken a little bit longer to get them out the door. At some point, cheaper energy, supply chains that have moved, and demographics and technology make the world disinflationary again in a very extreme way, probably deflationary. I have talked about deflation being the real boogeyman, and that it probably comes back mid-decade, mid to late decade. Deflation probably comes back sometime around 2026 or 2027 as panic pumping takes hold because EVs sell quickly due to pent-up demand. Was watching Bloomberg this morning, and the CEO of Hertz was on. And he said, look, there are no used cars coming off a lease. Tell me if this sounds familiar, because there were no cars really leased in 2020 or 2021. So the cars they would expect coming off of lease this year and next year aren't going to be there. And that's what will keep the used car market a little bit tight. But because Ford and GM and Volkswagen and Tesla are all ramping up EV production, and Tesla's cutting prices right now to get market share, and there's tax breaks in place, eventually it becomes pretty clear that we are going to see a lot of EVs sold. And when all the factories are built, about 2025, and production has ramped up to the point where roughly half of all the cars produced in 2026 will be EV, and probably close to 80% or more by 2030, it's a pretty easy equation. If the car companies are producing 80% EVs, then about 80% of the cars sold will be EVs. Not really anything that you can argue with there. So right now we have inflation, which is largely a result of COVID and the trade wars and the things that are emanating from the geopolitical side. If energy becomes disinflationary, that's it. There's really nothing left to cause inflation other than probably war. So let's hope that doesn't happen. We have learned that technology, which is one of the legs of my slow growth forever thesis, along with aging demographics, has been creating lower prices even in the so-called commodity supercycle. We saw a headline a while back that Tesla, and actually it was in their presentation when they gave it, hit the news as people were like, oh boy, this makes a difference, that they're not going to need as many rare earth metals for their motors, that they can use different types of magnets and get the same impact. Now, I suspect that it's going to be more along the lines of a 50 to 60% reduction in rare earth metals, not completely getting rid of them, but we'll see. Elon Musk likes to promise the moon and, blow up a rocket on the way there. But it was the reason why I sold MP Materials. I put out a couple articles to that effect. Have a couple of puts that are still sold outstanding on that one, so I'll have to figure out what to do about that. I don't think MP is going to crash and burn and disappear. I just think that they lost one of their growth engines, one of their growth drivers, which means that instead of that stock maybe going to 100, it's probably going to be choppy for a while, between 20-ish and 40-ish. So the next time it's closer to 40-ish, as some narrative says, look at all the EV sales, right? The narrative that they haven't put out there yet. But that narrative is coming. Oh, look at all the EV sales. 2026 looks like a huge year in EV sales. You'll probably get that narrative in 2025. You heard it here first. So if inflation is indeed transitory, but it's kind of a longer term transitory, not like the whole 1970s to 1980, 81, more along the lines of, hey, we had an event that we've never had before. Russia and the Saudis and China decided to use it to their advantage. Boy, go figure on that one. And now the energy transition was just a little bit bumpier than we had hoped it would be. Who knows? We might have found a way to make it bumpy either way. Of a more immediate nature, as a risk to the markets, that the debt ceiling seems to be being used for politics more than normal. And I think that the solution is going to look like this. Kevin McCarthy is going to agree to raise the debt ceiling. He's not going to have really much of a choice, but he's going to ask President Biden, look, bro, we've known each other a long time, back when you're beating up those guys in the 60s, the imaginary ones. And I need a favor. I'll give you a favor. You give me a favor. Sort of the nature of politics. I need you to say that you're going to negotiate on the budget. And Joe will say, fine, I can say that, but let's put this stuff behind us until 2025. Let's not have to go through this again in 2024. Let's just be done with these politics. And you never know. We'll see what happens to the presidency and Congress in 2024. I'll give you a hint. The Democrats are going to win again. They're going to take the House. They're going to pick up a few more seats in the Senate. They won't get to 60, probably get to 53, 54, 55. And you ought to factor that into your thinking, because while a third of the population got what they wanted in Roe versus Wade being overturned, and I'm not going to argue the morals on that because, I've been raised Catholic and still uncomfortable with the whole concept of abortion, especially later, even though scientific part of me says, well, there's not really any consciousness until about 6 months, right? It's a struggle to try to figure that one out, unless you just have dogma. And I try to avoid dogma. That makes my life harder. But what the Republicans did in getting Roe versus Wade overturned energized the Democrats in a way I've never seen in my life. And I think it's pretty apparent that with demographics favoring the Democrats, and we've seen this coming for a long time, and now it's not good enough for the Republicans to get a few extra percent of the undecided or the independent vote. They need to dominate the undecided and the independent vote to win anymore. I've seen elections in Republican districts come down to the last couple hundred votes across the country, including in Wisconsin, where our gerrymandering is so bad that looks like we're going to have a Supreme Court lawsuit over it. So when we take a look at the future, we have to analyze government policy. This debt ceiling plays into that. Kevin McCarthy knows that he's probably not going to be in the majority very long. But even though he's going to be in the majority for a little while, he's not going to get anything done. So he has to look like he can work with a Democratic president, because that's probably what he's going to get. And he's probably going to be in the minority again in 2 years. And he, like all politicians, wants to hold on to as much power as possible, because that does what? Puts more money in their pocket. People could say, well, he's just trying to do good things. Bullshit. Sure, he's trying to do some good things. Other things are just politics for politics' sake and satisfying your corporate overlord donors, whoever they might be. They're on both sides of the aisle. Kevin McCarthy knows that alternative energy is coming. He knows what's going on. Why do you think I pay such close attention to politics? The information I get is ridiculous. When I call bullshit on something, I'm usually right, because I'm just calling bullshit in public something that somebody knows because they're in the room. They can only say in private. So this debt ceiling is going to go to the wire because it has to. Because Kevin McCarthy has to keep his people in line and keep them on his side. But that probably scares the market, because most people think that we could actually default on our debt. And the reality is that the president has emergency powers to avoid that. Nobody talks about that. So we're going to get some jitterbugging going into the Fed meeting and going into the debt ceiling deadline, which is June-ish. Nobody knows for sure until they, have to do something extraordinary to avoid a default. Looks like June. So what else do we know? We know that the dollar, which I told you when President Biden was elected was going to soar higher, it did, has corrected back. And I think the chart is creating a bit of a bluff here. It's trying to convince people that the dollar is going to plunge. And there's a lot of people who like that narrative too, even though they've been wrong for a very, very long time again. I did that interview with Forex Analytics. I said the dollar is going to peak and it's going to come off. And now there's a pretty good chance that the dollar is going to rebound. It may not reach its highs, may only get about halfway back, then probably has another leg down, A, B, C. Where have we heard that wavy kind of thing before? So when this dollar rises, probably in the next month or two, and the debt ceiling is hitting a crescendo, and the Fed isn't particularly nice, I think they're going to be ambivalent. I think it's clear that they have the data they need to say, look, we can't pause yet, and we think there's more work to be done. I think that will be the message. You're going to get a month or two of the market, kind of shitting itself. Am I positive that's going to happen? Nope. But it seems like a pretty good chance that it will. And I don't want you to get really scared if it does. Rather, I want you to be thinking about what you're going to buy, because we are already in April, almost May. That by Labor Day, we want to be really getting close to being fully invested. Bitcoin. Why is Bitcoin important? Well, people who talk about a dollar collapse, the Bitcoin maximalists, the Austrian economists, pretenders, they really don't understand the theory they're talking about. They just pick and choose parts that satisfy their ideology and their paranoia and their historical ignorance. Sometimes I make my laugh when I pick on those poor Austrian economists. Nobody even knows what I'm talking about most of the time. There's three schools of economics: Keynesian, Austrian, and Chicago. And somewhere between Chicago and Keynes is what's right, especially in the United States. In other parts of the world, there is some merit in Austrian economics because they don't have what the United States has, which is the strongest everything in the world. It's good to be king, like the dollar. All the talk about the dollar losing its reserve currency status. Nope. In fact, more transactions are done in the world with the dollar today than before COVID. Two major central banks are reducing the amount of dollars that they hold. China, which started doing it in 2014, and Japan, which is back and forth, depending on what they need to do at a given time. China's pretty big. And since they had the biggest pile of reserve currency, after essentially being subsidized by the West for 4 decades, and now we're going to take over Taiwan, meow, meow, if you don't keep subsidizing us, meow, meow. It's all a big game. The levels of hypocrisy are off the charts. Once again, I tell you, read a little bit of history about China, especially going back to the early 70s, late 60s, early 70s. Take a look at how all these things play together, from the petrodollar of Saudi Arabia, which is just, a corrupt regime that's in it for the money. Fine, let them be in it for the money. At least we know where they stand. China got money from the United States and the rest of the West for a very long time, because the theory was angry, cold, hungry billion Chinese was bad for world peace. And now you got President Xi with his little wolf warriors who wants to keep sucking on the tit of the West and the democratized world. And he wants to exploit the emerging markets the same way that we did. Read, if you haven't, Confessions of an Economic Hitman by John Perkins. I'll pop it up in the chat rooms. When you start learning all this history, and I know a lot of you have seen it, a lot of you are older than me, you know what I'm talking about, but there's a lot of millennials who have joined the service. I've noticed that. Welcome. Open your minds. Understand there's a lot of smart people out here. We've seen a lot of shit. And the reason why Bitcoin is a thing is not because the dollar is going to collapse. It's because the dollar is too strong. Ask China, Russia, and the emerging markets. Bitcoin is going to be a tool in international trade for when the dollar is too strong and too hard to deal with. And it is going to be somewhat of a balance to the geopolitical teeter-totters that are all going at once. I haven't really thought of how to describe this analogy. You've heard of 3D chess. I want there to be some sort of 3D spinning, stacked teeter-totter array. You've seen those videos where they speed it up and they show all the cars going through an intersection in many different directions and overlapping and never hit each other. Right? It's a manipulated GIF or film. Something like that for teeter-totters. China, and United States, and Russia, and Saudi Arabia, and Europe, and the UK, and Japan, Singapore, Switzerland, Australia, Canada, various emerging markets, carrying gold, carrying guns, carrying food, technology, airplanes, cars, all the things that move around the world. And 88% of those transactions are done with a dollar on at least one side. 88%. Currency transactions are the same way. Most currency transactions have a dollar on one side of it. It's like, I showed that chart recently. It's around 80%. Might be a little lower than that, 77%, something like that. So everybody wants dollars. Everybody needs them. It's not the petrodollar that's doing that anymore. It's the everything dollar. It's king dollar. And it's going to be king dollar the rest of your life. Because no other economy can do what we do. And ultimately, currency is about trust. Somebody asked last week about the yuan. I said, well, would you trade your dollars for yuan right now? Oh, that's what you mean. So again, I implore you, learn a little bit something about Bitcoin. If you had bought the Grayscale Bitcoin Trust when I brought it up at the end of last year, you have basically doubled your money because the discount has narrowed a bit. The price of Bitcoin, which I told you to buy that too when it was $14, $15, $16, $17, $18,000. And everybody said, well, what if it goes to 12? And I basically said a version of who gives a zuck, right? Something like that. That's my new 4-letter word is a zuck. Get zucked. Go get zucked. We'll talk about Facebook in a minute. So all these things are going on, all these moving parts. And we know that the Fed has a meeting next week. We know that the debt ceiling is going to be a dirty dance. That means that U.S. Treasury volatility probably increases again. I've shown you that chart. I'll put it in this article. And that's going to be complicated by the fact that the banks aren't all getting the message. Remember, I sold those puts on First Republic, and a couple of weeks later, I bought them back in because I said on this very program, I'm not so sure that the First Republic management gets it. I don't think they understand that they can go to zero. And I said, what? How much did I say First Republic was either last week or the week before? Does anybody remember how much I said they had to dilute to raise around $30 billion, which is more now? What percentage did I put on that for their dilution? Nobody remembers? Boo. 92%, Tom says. It was 80 to 90%. That meant they were going to have to issue 8 or 9 times more shares than are currently outstanding. Management didn't want to do it. Wipe out their bonus. Well, now nobody wants to buy the bank. Nobody wants to trigger. I think there's some of this in there, right? Same reason that Lehman wasn't bailed out. People want to stick at the First Republic at this point. Just buy them from the FDIC when they fail, which I think is 80% likely right now. Unless Buffett or somebody that the government will work with overnight comes in to buy that bank, they're just going to let it go to the FDIC because that's probably a better deal than buying it from First Republic. Management doesn't seem to want to dilute it 90%. It's the only option at this point. I think the big banks are going to tell the FDIC and the Fed, just take them under and give us our money back. I don't think that's what's going to happen. And it has to, because otherwise JP Morgan, Citigroup, and the rest of them are never going to help bail out a bank like First Republic again. The management just got a little bit too full of themselves, like some managements will do. So that means that the banking system, which has been saying, oh, we're not going to have to tighten up that much, it's going to have to tighten up a bit more than they think. And that means less lending. We've already seen it become harder to get home loans and car loans. Credit cards are popping back up on interest rates. I think I just got my last balance transfer card for a while. Got an offer from First West or Great West. I don't know. It was one of the big ones. Hey, do you want a balance transfer card? I was like, oh, sure. So now that money that I had floating so that I didn't have to pay taxes, all right, just keeping money in my company and using the credit system to delay my taxes, give me one more year. All right. Not so sure I'm going to get another one of those. Not this year, I don't think. Maybe next year. We'll see. Maybe I'll get one just in a nick of time to roll it again. But bank credit's going to get tighter, and that's actually going to help complicate U.S. Treasury volatility because banks are buying a lot of the treasuries. Now, what comes out of that? What comes out of that is a stealth type of quantitative easing as they bail out a few of the banks, as the Fed has to step in and buy some of the treasury bonds so that the bond auctions don't fail. What does that mean? It means there's going to be more money into the economy later this year. Might start imminently. We'll see what happens with First Republic. But before the banks can release that money as loans and put it into the system, because remember, they're just filling holes on their balance sheet now. Interest rates have to come down so that some of that debt on their balance sheet goes from losses to at least break even. And then they create money for the system, right? They loan it out, it becomes money creation. That probably doesn't happen this year. Interest rates, I don't think, are going down this year, unless things really tip over, in which case that's really bad for the stock market. Because at some point, people start to change the narrative. And what would the next narrative be? The Fed screwed up again. Not the banks didn't know what the fuck they were doing. Oh, not that the banks didn't know what the zuck they were doing, right? Not that people are getting over their skis on their credit profiles again. It's always somebody else's fault. Let's blame the Fed. All right. So if I think the stock market's going to start picking up in the second half of this year, and I might have been a little bit wrong, but here's what the correction from the top, right? This is when I told you, raise money, raise cash. It was over here. What is this pattern? Is this an A, B, right? Is this A, B, C? Is that the C, D, E, or E, F, G? Whatever. This is a pretty clear corrective pattern. The question is this a new up market? We don't know yet, because we don't know until it's done and over with where the actual corrective labeling goes. This could very well be 1, 2, 3, 4, 5. A lot of smart people that I follow are saying that the bottom of the stock market is low 3000s. Tom Lee says that it was right here. He says October bottom was it. And he has pretty good evidence for that. And his evidence basically centers around the idea that inflation peaked last summer, that high yield spreads usually blow out, and that represents the bottom of the market. Well, that would have happened here and here. So he has a lot of evidence that says this is the bottom. And I don't know that I really want to quibble too much. I think that this whole area is buyable. Depends on what you're buying. You have to go pick by pick at this point. Somebody says, Raul Paul says that October will be the bottom too. Yeah, it's hard to know to a month. But I've said after Labor Day. Market bottoms after Labor Day and then starts to rebound. But is it going to be a straight down thing like this last June? This is the bottom that I've said we have to hold. The June bottom, people ask me, don't you mean the October bottom? No. If we go below this line here, that means that this one's pretty much toast. We need to stay above this June bottom so we don't even challenge the October bottom. And then it can look like a different type of pattern. Anybody know what that would be? If it bottoms right in here and holds, what does that look like? Come on. You've got a head on your shoulders. So if it bottoms here, 37-ish, 38-ish, whatever, then it starts going back up, that means we're probably in a new bull market. So we're really talking single-digit percentage difference, and I don't want you to focus too much on that. What I'd rather have you do is focus on the companies and the ETFs that you want to own. Somebody asked in the chat room, what ETF should I be buying right now? And I said, not too many. Why? Because ETFs are baskets of stocks. Usually the top 10 to 20 stocks are, 80% of the fund, unless it's equal weight. It's like PBW, 50 stocks matter, but it's really just a theme at that point, not tied to any one company. Other funds like ARK, Next Generation Internet, is tied to Tesla, Square, Coinbase, Bitcoin, and like 4 or 5 others. And that's like 70% of the fund, the top 12 holdings. So looking at the guts of the ETFs matters. And because ARK Next Gen Internet is the only one with Bitcoin exposure other than a Bitcoin fund, which I told you to buy a long time ago, it's an interesting fund for me. It's a way for me to have Bitcoin exposure inside of a 401k plan that I sell. So I can't put GBTC in it, but I can put ARKW in it, which owns some GBTC. I'm actually doing a video for the 401k plan that I just placed later today. I'm going to have to put on a nice shirt, though. I'm in a sweatshirt right now. So we'll see how this looks. Does it get to here or does it hold, right? So it's either going to go here and up or here and up. Either way, trying to guess the bottom, trying to divine it, it's the wrong approach. Buy some here. If it starts going up, buy more quick. Buy some here. And if it goes down, take a deep breath and then buy more as it gets down towards 3,000. So going to be a 2-step, 1, 2, or 1, 2. It is okay to wait for things to start going back up. It is. You can grab this side of the pivot. You don't have to grab this side of the pivot. Sometimes it goes lower. It's okay to pyramid your holdings. So AST Space Mobile screamed 15% yesterday, and now it's flat today. Somebody goes, you put out an alert. I said, yeah, I put out an alert. I've put out like 10 alerts on AST Space Mobile. If you're selling puts, you probably have a cost. You're probably even on this one. You've built your position over a year. Now, could you have just guessed right and bought it a couple weeks ago? before they announced that their technology worked. There's a lot more to it, but in general, the technology worked. Samsung is very excited. So is Rakuten and AT&T. So look, scale in. Buy a little now. If it drops back to 4, buy a little more. Everybody should be working on getting to their max asset allocation on AST Space Mobile right now and over the next several months. Whether that's 1% or 2% or 3% or 6%, I don't know. That's up to you to decide that. How much risk do you want to take on a company that's going to have a lot of execution risk? Now, the one thing I can tell you, and some of the knucklehead shorts, want to deny that this is true, but I'm just telling you, this company is not going to dilute very much. The CEO/chairman/founder owns almost 40% of the company. The last thing he wants is to dilute. He'll borrow money and get upfront payment on contracts before he dilutes. The telecoms are responsible for $400 million of the total of $700 million that these guys have raised over the last couple of years. What does that tell you? What does it tell you? That the biggest investors are their potential customers. And that was just to get the proof of concept. Now that they have proof of concept, what do you think they're going to do? What do you think AT&T is going to do with these guys? They've already hinted at it. They're going to help them get some satellites up in the air is what they're going to do. So while this company might dilute 5 to 10% because they have some sort of warrant kicker that they throw in, it's not going to have much dilution at all. If somebody asks, is there a risk of buyout? Well, sure. The guy who owns this wants to make $10 to $20 billion for himself. Somebody offers to write him a check and take over the company for $10 to $20 billion. Sure, he'll take the money. In which case we get we get 2/3 of our money fast instead of having to wait years and years to get the other third. Ain't nobody going to buy him out cheap. He owns the shares and he's got super voting rights. Understand, when these guys start a company, they go through all this work. They're not going to sell out for 5 or 10% of what they think they can get in a few years. It doesn't work that way. They'll wait until they're going to get paid. How many times have we talked about executives wanting to get paid? Founders are just like that too. Some of them are real zuckers. It's not an accident that I wrote the AT&T article right before I wrote the AST Space Mobile article. Now, I didn't know that I was going to be writing an article on the phone call. The title of the article, the working title of the article was American Tower Invested in AST Space Mobile. Should you? And you should too. Because you really shouldn't have a question in the title. That almost always implies no. Ametis is going to have the same type of good news at some point the AST Space Mobile has. Stonegate's very conservative approach, saying $25 to $35 a share on Ametis. Take a look at their new report. Take a look at everything here. Then go all the way down to the risk. Debt level and interest expense could limit cash flows. Duh. What have we been talking about for quite a while now? The company currently owes about $161 million to Third Eye Capital, and it's not a negligible interest rate, but they did repay $26 million in 2022. If they can't pay it off in the next year, they have to sell some assets. They're trying not to sell assets. It's going to be a close call whether or not they have to. I suspect they spin off 10 to 15% of the India refinery. I thought maybe they'd sell the whole thing. But the reason why he talked about a $900 million valuation is because if you float 10% of it or 15% of it, there you go. That pays off virtually all your debt. And you keep control of the asset. And if you want it to be, it can be accretive to your balance sheet. We've talked about how those deals work. If you're the 80% owner of a company, you can accrete it on your balance sheet if you want to. The recent contracts with India on the biodiesel are a big deal because now they have free cash flow every quarter. There you go. They have contracts with India now for biodiesel that are going to help them free cash flow, really pay for everything the company needs. So it's just a matter of how do they pay off the debt. And all they really have to do is float 10 to 15% of the refinery. Or they can find a joint venture partner on something else. And they have no shortage of joint venture partner opportunities. Chevron, Exxon, BP, right? Trillium, which you're already doing business with. This stock is beat up because people think they might run out of money. They won't. They might have to monetize an asset, which is, I think it's going to be India. I don't think he would have told me and said in his interview, in his earnings call, I don't think he would have talked about floating India shares if it wasn't the number one thing on their list to do. All right, last one that we're going to take a look at is Microsoft. Somebody asked me how the chart looks, and they wanted to know if it had started to act different. Well, since ChatGPT, right, it started to come off of this parabolic move and just started right into another parabolic move. These almost always fail, almost always. And the buy area, I'll switch this to a weekly to be a little bit more current. Unless it breaks out the new highs, you almost can see a pretty easy ABC. So a price between 220. I moved the bottom fishing up to 180. I just can't see it blowing through here. And in fact, bottom fishing maybe about there, about 190 something, 192, 93, 94. So really any price under 200 for Microsoft, you just start buying. And I think it's probably going to get there because I think it was on its way. I think ChatGPT bounced it back up. The reality is it's going to take a long time to make money on that. So it probably comes back down in here somewhere. Meta, so let's take a look at Meta. I said way up here it was going to go down to 100. And it did, and we didn't buy it. Mainly because I don't like the Zuck that runs the company. If you're reading up on Meta, and they're screaming up today, if you're reading up on them, you can't get by the fact that they have a massive amount of R&D that they have to do if they're not just going to become an online multi-service telephone book and Craigslist. For them to really do metaverse and AI and everything else, it's going to cost billions and billions, which they've already spent, and they're still way behind. So I think this price here is kind of the equilibrium line. I think you get a shot under 200 again. And if you really want to own it, because you have faith in Zuck, that crazy Zuck, then go ahead. Because this looks like a pretty good equilibrium line in the 170s or so. I don't think I'll buy it. I'll just get my exposure through QQQ. If they ever announce a new CEO, I might change my mind. Or if they introduce a dividend, then I'd be interested then too, like I am with Microsoft. Like Microsoft, did you know that they've increased their dividend 21 years already? Just a little bit at a time. But technically, they're an achiever or an aristocrat or some stupid dividend label. Seems like just yesterday they introduced a dividend. Facebook should do it. In any case, 190-ish even on Meta. With Microsoft, would I sell it? I probably would not if I owned it, because what I'd rather do is just add, unless you're like super loaded on it. And I have a couple people that I've been consulting with on selling it. So like my friend in San Francisco, who I'll be visiting soon, this is probably a good spot to sell covered calls. You've got a bunch of shares that you're trying to get out of, right? We sold some covered calls and that worked out pretty well. So this is probably a good spot to sell covered calls. And if you end up, out of it at 330 or 340 or something, great, pretty good price. I don't think it has a lot of, just look at how much it's done already. Then take a look at its earnings. It looks like the Activision deal is actually going to get busted. That's shocking to me. Unless, maybe now that the UK, which I'm sure was in cahoots with the US Department of Justice, maybe Microsoft comes to the table with exactly the deal that Justice has asked for, which is probably the right deal. Microsoft should not be able to buy Activision and then take those games off the market for other companies. Maybe a period of exclusivity when they're brought to market, 90 days or something, 6 months. I don't know. I don't know what's a good time period for before you give the game to everybody. But I'd be pretty sure this is going to correct down towards here. But it's such a great company. It's hard to sell it, right? What if it goes up to a zillion? Then that would suck. So if it's not going to change your life to see it wiggle around for a while, you don't have to do much. If you're in a position where you're trying to cash out because of work, like actually a couple of you are, then sell some covered calls. All right, call it a day. The macro dashes will be out today sometime.